evening and welcome to the weekend edition. My name is Peter Reznicek from ShadowTrader.net and the Weekly Options Room, which, by the way, had another killer week, continuing to kick ass week after week for about 6 years or so running now, always at the high watermark for profits. But this show isn't about that. I'm not here to brag about trading. This isn't about me. It's actually about you. That's right. This whole show is about you and what you need to know and look at and all the signposts and nuances and important things that you should know before you try to short this market. And I say that specifically now at this juncture because I know what's on your minds. I know exactly how you think. As a matter of fact, I know exactly what's in your mind right now. And that all of you are thinking, when can I short this market? Or maybe you already are short this market. And then you're frustrated when you see that at the end of the day, it bounces higher and all that. So this show is going to be dedicated to talking about the specific signposts that you need to see on the side of that road when you take that exit down to Bearville. You know what I'm saying? And you think it's going to be smooth sailing, but it's not, okay? You need to know all the things that need to be happening that are going to confirm that bearish outlook, all right? So we're going to be talking about not only chart patterns, but more importantly, getting under the hood. We're going to talk a lot about sectors, market internals, and market profile. I'm going to show you why right now at this very juncture, of course, things may change on Monday morning. I can't predict that. But at this very juncture, the sellers are still not in this market. Most importantly, like I said, what you need to be looking for to prove that they are if and when they actually show up. All right? All that and a lot more in today's weekend edition. Okay, as always, we like to begin this show with what I call the weekend review. But this weekend review is a little bit special in that I want you to pay extra attention to what I'm talking about here. And I want you to pay close attention, actually, obviously, to all the segments. But more importantly, what I'm trying to convey is that we're going to be talking about, in terms of segments of the show, we're going to do weekend review, what's really going on, chart patterns as always, market internals, sector spotlight, and market profile. So we've got these number of segments, and all of which are going to be sort of based around the same theme, in that there's going to be divergence talked about in all of them in terms of different things pushing and pulling that to me indicate that the market is not ready to sell off yet, or at the very least that it wasn't happening yet in a major way today on Friday, October 3rd. All right, so just keep that in mind. All right, so starting with this weekend review, first thing that should be jumping out at you is that, first of all, everything was still positive for the week. All of this is measured from the Monday open to the Friday close. Russell was the strongest, but NASDAQ and S&P 500 both had respectable weeks. More importantly, both of these all-time highs, right? New all-time highs on all the majors, which is important. But here's where things get interesting, and this is the main takeaway, kind of the theme of what we're talking about, is look at the mixed bag here when this is measured from the Monday open to the Friday's close. And technology is still leading it. I've always been saying over and over that the market's generally going to go how the XLK goes because it's such a big weight. The weight actually increased at the end of September when the new weights came out. It's actually higher now in XLK. I think we're pushing it like 34% or whatnot. But look at the push-pull between XLK is the top largest sector. You have financials behind it, which were down actually, right? This is, again, I said this in the last video, I think this is not in the proper order. I need to fix that. But so I'm not going to talk about healthcare, but look at consumer discretionary, which is actually down 1.29% for the week. Why? Mainly on the heels of Tesla, right? Tesla had a very bearish Thursday and Friday after the sales figures came out, which were actually great, but it was a buy on the rumor, sell on the news. There was obviously a lot of momentum traders, a lot of hot money in Tesla, because the moment that stock opened early in the session on Thursday, we just kind of fell like a stone and continued to fall further on Friday. And that, of course, is the heaviest weight in the consumer discretionary sector. So you can see that that went down a bit. Continuing on, however, look at the contrast with healthcare. Now, healthcare is not as big of a sector as it once was, but it's a decent weight in the S&P. It was up almost 7% on the week. All right, we had a play in Weekly Options Room on UNH, United Healthcare. Worked out fantastic. We literally had a spread that we were paid a nickel to put on. The market gave us 5 cents to put it on, and we took it off today for over $3. That's healthcare for you. I mean, it was just fantastic. And communications as well. Look at this. Relatively heavy weight in the S&P, down 2%. Staples about flat. Energy kind of losing it, down for the week. Utilities continue to be data center play, basically, right? So it's like utility strong, energy weak. A pairs trade here, honestly, might be XLU minus XLE dollar weighted pairs trade. I've been thinking about that. That probably is going to make sense going forward. Materials were up a little bit and real estate was up a little bit. Bonds were kind of flat. Yields were relatively flat. VIX picked up a little bit, but mainly just towards the end of the week. Gold continues to shine. Unbelievable. I mean, it's just the trade that just keeps on giving. I've been talking about this trade a lot. I made a video called How I'm Trading Gold, I don't know, maybe a month and a half ago, talking about the short-term trade and the long-term trade. The long-term trade, you just basically have to sit in and not touch it until gold hits 4,000. At the very least 4,000, which I think we're going to see. The short-term trade is you have to work those GC futures and be selling the covered calls because they have everyday expiries, and be selling the puts as well in GC. And it's just working because the pullbacks in gold are just very tiny right now. Just little liquidation breaks and nothing's happening to the downside. So that trade continues to print money week after week for myself and my subscribers. Absolutely loving it. Oil has been down quite a bit this week. That's an interesting break because it's really close to the $60 level. And I have a feeling we're going to break into the 50s. And that's when oil kind of gets quite bearish. But it also spells opportunity because oil generally doesn't spend a lot of time in the 50s. And when you see those 50s, it's usually a buying opportunity somewhere in there. So keep that in mind. And Bitcoin, of course, had a phenomenal week. It is the clear winner of every asset on this whole board, as you can see, up 10% for the week. And you should stay tuned for later in this program because Bitcoin and anything related to Bitcoin is going to be the #1 draft pick, where I pick my best idea going forward. And it's got to be Bitcoin this week. So not only /BTC contracts, IBIT, pick your ETF of choice, you name it. Coinbase as well. We have a solid trade going on in Coin this week. We had another one last week. We took off for a profit. We're rinse repeating in Coinbase, which has really been a money printer as well. So anything Bitcoin or Bitcoin related is probably going to continue to be hot into the end of the year. All right. That's all for the weekend review. Let's get into the chart patterns and see what's really going on. Okay, time now for what's really going on, where the road meets the road, and we talk about the actual technical analysis of the S&P and the NASDAQ 100. Before we get into it, though, just a little reminder of what we just talked about in that weekend review. Remember, it was all about the fact that not all of those sectors were going down today. They were very, very mixed, but not only were they very, very mixed, but we saw a lot of strength in certain pockets of the market, such as healthcare and utilities. And right off the bat, that should have you thinking rotational as opposed to initiating selling across the board. Remember, when the market is going to come down and it is going to have a sustained move down that you can actually make money out of as opposed to get shaken out of, right? Hint, hint. I'm sure that this is happening to a lot of people because I always get emails of people trying to short the market and it doesn't really work at this juncture. You will see that all of the sectors need to be working in concert. You will not have money flowing out of some areas and into other areas. It will be flowing out of all areas when the market is actually selling. So the key takeaway, I just want to remind you of that weekend review, was those sectors that were dark green from Monday to Friday, such as I mentioned, healthcare, utilities, financials as well. Financials were quite strong on the week as opposed to tech. There was some push-pull there. And those are the two largest sectors of the market. Financials, as of, I'm just looking at my sector minder over there, as of the end of September when they got switched up, 13.5% of the market. And as I was saying also, that tech rose in weight. It's now 34.8% of the market. So be aware of that as well. As XLK goes, generally the S&P goes, it's very, very hard for the S&P to move opposite that tech sector, given that it's now almost 35% of the market. Just think about that. That is crazy to me, is that the market, you know, the leadership is getting more and more narrow in that sense when you have more and more weight in just one group. But regardless, let's take a look at chart patterns. And again, we're going to stay with the theme because remember, the title of the video is Don't Short the Market Until You See This, right? Basically, so you need to have some confirmation. And from a technical standpoint, that confirmation is certainly not there. But let's look at what needs to happen in order for me particularly, and I would hope anybody, but let's just say what would get me thinking this market would be short. Well, the first thing is that I'm watching very closely the first line in the sand, which is always the 8 EMA, which is the yellow line right here. And you can see that since, I would say, mid mid to early September right here, about 1/3 of the way through September. Look at the action around the 8. Held, went below, but then closed above. And here just went below for one day, but had a pretty strong close. But more importantly, when it went below that one day, it stopped dead on the 21, rallied, and since then you've just been riding that 8. So to me, first thing that's got to happen is you've got to see a daily bar close below the 8. And then I've got this shorter term trend line here. I've got this perfect channel drawn, which is nice because you can see they're perfectly parallel to each other. So this is obviously the channel. And yes, you are in the upper part of the channel, kind of in the upper third, which usually indicates that there's potential to move to the middle at least or to the lower end. But at the same time, you're well above the 8. And what I've done here is I've drawn in this shorter term trend line, which I think should be helpful right here from this early September low. And that puts you right here. So you can't really come down meaningfully in the market until you start to break trend, which has to start here. And then the real larger trend line break would be moving out of the channel. But really, if we go like this and pull it in a bit, and I've done this on the NASDAQ, which I'll show you next, but I haven't done it yet on the S&P, right? Look at where that is in terms of the trend line. If you go here, and you just swing it out to here, you're still right there. Even the main trend is still intact from there. Now, are you getting a little bit close? Yes, but I'm taking these other lines into consideration, given that even if we break this main one here, and I'm not even sure if I drew that right. Oh, I did draw it right, because I'm touching here, right? So it's always on the first touch, correct? If you touch here, notice that it goes through a little bit, and now you're still above. So that's what I'd be looking for. You know, you want to see trend line break, because that's really where the meat of the move is going to occur. And trying to short up near the high to get that perfect location is really, really a hard thing to do. And it's oftentimes just not worth it, basically. You can think of it that way, that it's just not worth it when you figure all the times that you might get stopped out, whatever, before you're able to hit it just right. So let's just keep that in mind. There's no trend line break. The channel here is intact, and you want to be looking for that 8 EMA to break at the least, but most importantly, confirmed close of a daily bar below it. Now let's look at the S&P, or the NASDAQ 100 rather. So you've got the same trend line here from the April lows connecting to here. The wedge is somewhat tightening. That can be bearish, but later on. But again, look at where we are vis-a-vis the 8. The same thing happened as I told you about moving below the 8. This one actually closed just above, and you're still right here. So for the NASDAQ 100, which can tend to be a little bit more volatile, I would say just watch the main trend line here at the 21. The first signal you're going to get is if the daily bar next week closes below the 8. But then you've got the 21 coming together with the trend line right underneath it. So this is probably going to go like this, and it's going to meet up here. And you can have that 21 probably just above the trend line at that point. And that's your line in the sand. That's the real key right there. Without a breach of that level, and a you know, preferably a daily bar close below it, but at least breaching that level to give a short signal, there's really nothing there on the short side. You just don't have it. So, all right, keep all of that in mind. Again, I will just reiterate one last time. The easier money in the market is always to find the train that has already left the station and then get on that particular train, as opposed to be standing in the yard where you see all the trains on the tracks and trying to pick which one is about to move out of the station, right? That's a bit more difficult. That's analogous, I think, to trying to kind of like picking a top. If you actually want to go somewhere, you want to get on that train that's already moving out of the station, right? Because you know you've got something going. So in that case, you want to be looking for these breaks of these moving averages and the trend line as well. So watch for that potentially next week. And without that signal, no short. Continuing with our theme of not overly bearish yet and divergence in different things, that indicates that we have a lot of push-pull and that the sellers are not all pulling in the same direction, so to speak. We're going to talk a little bit about market internals. So I want to draw your attention to the boxes right here, these that are blinking here. These are the 11 sectors of the S&P as measured from the open. And what you're looking at right now is the Friday activity. And this just kind of underscores what I was saying earlier in the show, is look at the divergence here. Tech down 60 basis. Again, this is from the 9:30 a.m. open to Friday close. But look at financials, up 60 basis. So it was the same amount And the first number is the weight in the S&P. So as I was saying, this is almost 35% of the market, and this is 13.5% of the market. And then consumer discretionary, which is about 11% of the market, was down pretty firm on Friday, again on the heels of Tesla mostly. And then you've got this mixed bag here where you've got communications down a bit, healthcare, wow, just like the clear winner. I mean, this gain here was just Friday. As I showed you in the weekend review, it was up more for the week, but just Friday, up almost 1%. And almost 10% of the market, about 9% of the market right there. And then industrials kind of flat, staples up just a little bit, energy down, utilities also a clear winner. Again, I think this is all the AI trade of the data centers, et cetera, because they're just going to be taking so much power. And then you got real estate and materials relatively flat. So that's the story there sector-wise. Again, the takeaway here is very, very mixed bag. And in a more bearish market, you're not going to see that. You're also not going to see in a bearish tape this. You're not going to see the breadth being 2-to-1 positive on both sides, meaning that there's 2 times the amount of volume going into up stocks as opposed to down stocks on Friday. And mind you, that number can always be quite distorted if the market opens on a true gap, and Friday was not a true gap. We did gap a little bit, but we opened well inside of range. So there was plenty of time for that breadth to get negative over the course of the day, and it did not. AD line, similar situation, up about 600 on the NYSE and 865 on the NASDAQ. Okay, now continuing on, let's look at this weighted AD, which is the holy grail, I think, of all indicators. This is something I came up with a number of years ago, and it's super duper popular, and I highly recommend it. You should check it out on our site under the indicators tab. It's in our store. And basically what it's doing is giving you a pictorial representation of those 11 sectors every day from the open, printing these histograms, which is basically just a cumulative number of the percentage change from the open of those sectors. And as you can see, not too bearish on Friday. This whole activity right here, these lines that I put here, these yellow lines, that's the demarcation of the different days. So this is obviously Wednesday, this is Thursday, this is Friday. And basically, whenever you have it trading on both sides of the zero line, like you have here, like you have on Friday, that's none too bearish. A more bearish market is going to look really kind of like this, but even worse, it's going to just keep going like that from upper left to lower right. It's not going to improve like this. And this weighted AD on Friday just traded in both ways. So it tells you that it was a very bifurcated market. It was a morning session that was more positive, an afternoon session that was a bit weaker. But also just look at the numbers as well, like the absolute numbers. Like the read into the end of the day, 113, just not all that bearish. And then underneath here, we have the iceberg tick, which is another phenomenal tool that I highly recommend. This is really kind of changed things for me a lot in terms of how I view the tick, which I have always thought is one of the most important market internals out there. But this visual representation of seeing the amount of time spent that the NYSE tick does above zero or below zero, because it fills in that whole area, I call it painting. This painting aspect of this tick is really just valuable. So it just shows you that, for instance, in the first hour of trade, almost all of the time was spent ticking positively. And then you had a short area here of about 11 to 11:30 where it was negative, and then it was very mixed in the middle of the day. And then look at the end of the day, even here, where things got a bit more bearish, right? The market probably closed in like the lower third-ish of the session, and yet this wasn't that bearish. You only had one minus 1,000 tick over the course of the day. And look at all the green paint here, green paint here, green paint here. This is, again, all the time spent. And, you know, if you know how to read this stuff, you know that in a bearish tape, you would just see this banging into the red, on, and you would see very little positive tick action. There's always going to be positive ticks because the tick acts like barcode. It's just kind of up and down like that. But again, this is why it's important to know how much time is spent on either side of the zero line as opposed to what that absolute high or low is, or where that tick may be at any given moment. It's the amount of time spent, and as that builds from left to right over the course of the day, this iceberg tick really gives you a beautiful pictorial representation of seeing where that time was spent. So again, two extremely valuable indicators, both available on our site. I can't stress enough. But most importantly, the takeaway here is that this is not what a super bearish market looks like. When things are moving down, these internal, or I should say moving down more forcefully with stronger sellers, these internals will be looking differently. So if we get that trend line break, or if there is some sort of technical signal first, you want to go to these internals right away and then make sure that that stuff is confirming before you start to get too bearish. Okay, time now for sector spotlight, and usually we put the spotlight on just one sector, but because of what we're talking about in today's video about signposts of when this market is actually going to look more bearish, we're going to look at a number of sectors and look at the daily charts of probably almost all of them, of those 11 sectors, at least those first 7 or 8 that really matter. So let's start with XLK on the daily again, and you just want to be looking at this and understanding that, remember, the broad market, being the S&P 500, cannot do anything on its own. It doesn't really do anything. It's just kind of like, it isn't really anything, so to speak, the index. It's really made up of the stocks that are in it, and the movement of the index is always only the movement of the stocks that are in it, and then it's much easier to just group those by the 11 different sectors that they are, from technology all the way down to materials, right, and everything in between. The market can only move that way, and most importantly, the market is going to move more according to the weights of those sectors, right? So whatever materials are doing and real estate, for instance, which are two very small sectors, together they make up less than 4% of the market. That's not going to matter as much, right? It's a question of what is technology, financials, consumer discretionary, communications, healthcare, etc., what they are doing that is really going to drive the movement in the market. So let's look at some of those. XLK, again, would you say it's bearish here? I don't think so. Barely pulling into the 8, hasn't lost the 8 EMA, and again, since we crossed over the 8 here, we got this pinch of the 821 here. We have not had a daily bar close below the 8 EMA at all. So we got to see if we're going to get one there. Let's look at financials. All right, financials are a little bit weaker in that there might be a pinch here lower of the 821. I'm not sure, but really it's just a lot of sideways action. Really, the financials are kind of biding their time, and earnings week or earnings are about to kick off, I should say, for Q3 soon enough, and it always starts with the banks, right? There's always the early earnings is always like BACC, Wells Fargo, JPM, AXP, etc. So that also is something to be looking out for, because that's going to be happening pretty soon. All right, let's move on to consumer discretionary here. A little bit weaker, right? Obviously on the heels of Tesla, as I was saying. So this sector was weak. It's below the 8. It closed right on the 21. But I'm more focused on the fact that these highs here were so equal that I'm thinking of this as more or less a balance area. And we'd have to break out of that balance area in order to show us that there's some real weakness going on here. And of course, you can draw your trend line as always, and you're pretty much sitting right on trend in the consumer discretionary sector. So unless you can lose that trend, it is not going to be doing anything too bearish. All right, let's take a look at communications. Again, we're only going to look at like the top 7 or 8. A little bit weaker, but again, sideways for the last 2 days, but underneath the 21. So it's a little bit more bearish on the communications, and that's 10% of the market. And now let's move to healthcare, which had a great week. This is right here, probably the most important chart I'm going to show you, because if this isn't indicative of sector rotation, and remember that rotation in the market is healthy because it keeps the rally going, as opposed to when everything is coming down. I was saying, look at the week that healthcare had. I mean, it was just off the charts. I mean, you broke out here, and then you tacked on 3 more days of gains and completely just changed the tone of this very bearish consolidation that was kind of like this bear flag from here. Complete change of tone. So there's potential, I think, that healthcare stocks move up to the next resistance point, which is around this 150 area, and that right now is 8.9% of the market. So keep that in mind. And moving on, let's look at industrials and staples, and then we'll just wrap it up right there. Let's look at these last two here. Industrials, they look great. I mean, new all-time high today in the industrials. Let's look at staples. So no bearishness there in industrials, and that's 8% of the market. Staples, definitely a bit weaker, but this sector's been weak for a bit. But it's not really acting as too much of a drag on the market, because when we get out here past industrials, now you're starting to talk about sectors that are less than 5% of the market. So that's very important. So would I think of this as bearish? Absolutely. Do I think it's potentially moving lower? Could be. Maybe to this support. This is a balance area right here, so watch for a break. Could be in either direction. Staples, of course, weaker. But again, the key takeaway here, less than 5% of the market, and that is what is important. Staples right now are 4.9% of the market as of the new weights that came out at the end of September. So keep that in mind, right? So that's our sector spotlight for this week. Again, not a specific sector, but looking at many of the sectors, which will give us a better clue under the hood as to how weak the S&P is potentially. And right now, with these sectors looking the way they are with a little bit of push-pull, I would say not very as of yet. Okay, now we're going to get into market profile, which is also going to show us some important nuance along the lines of everything we've been discussing. Before we get into that, I just want to detour for a second here and remind everybody of the promotion that we've been running with Tasty Trade for a couple of years now. It's been going really, really well. If you open an account with Tasty Trade and you fund with $2,000, you basically get 6 months of the ShadowTrader Live Trading Suite, which is 2 trading rooms, stocks and options room and futures room, free for 6 months. And the reason I'm talking about this specifically now, even though it's been an ongoing promotion, is that now they've upped the ante a little bit, and they're doing this money match event up until November 30th. And basically, as you can see here, they will match the cash that you put into your account up to 1% and also give you 30 days of free commissions. So the first month that you trade with Tasty Trade, you're not going to pay a cent in commissions, which is kind of cool. And this is all accessed through our website, which is right here at shadowtrader.net. All you have to do is just scroll down on our homepage and you click here on the 6 months free deal, and you see open and fund the Tasty Trade account and get your 6 months of live trading. So if you click to get started here, that'll take you to a web page where you can fill it out, and it usually takes no more than 48 hours. Once you fund, they give us confirmation that you funded, and then we turn you on and you will get 6 months free of our live trading suite. And again, that's 2 trading rooms for the price of 1. You've got a stocks and options room and a day trading futures room. 7 traders trading live every day, all day in both of those rooms. All right, so definitely check that out. Again, that's our deal going on with Tasty Trade, and you can check it out at shadowtrader.net. And now let's keep with the theme that we've been talking about not so bearish yet. And let's talk about market profile. And we'll look at some signals here that you'll have to see in order for us to get more bearish and what's been going on. So first things first, you want to always pay close attention to where value is. Value is where 70% of the day's traded. This is, of course, the ES. Just to keep in mind, the profile is always on the ES. Futures, you can chart pretty much anything with profile, however. You can market profile on stocks, you can market profile on gold futures, crude futures, bond futures. It works very, very well on the ES, and I use this as kind of an extra market internal for the broad market. And I do write a newsletter about this every single morning, which comes out with like a 3 to 5 minute video of how I'm feeling about the profile and the market every morning. You can check that out at our site as well. There's a 1-week trial to that. But regardless, you now have value overlapping to up here for these 3 days. Kind of at equal value Wednesday and Thursday, and Friday you've got value overlapping to higher. So first things first is you need to see value markedly lower. That's the first thing I'm going to tell you, is if you're looking for this to get short next week, and it may be, like I said, I can't predict the future. I just go with it. That's the thing, is that traders who are proficient and consistent like myself, we go with. We don't try to predict. We don't try to get ahead of stuff. We don't pick tops. We don't pick bottoms. We go with. Like I told you about the example of getting on the train once it already leaves the station. That's what I do. I come into the station and I just stand there and wait. Which of these trains is going to leave? Oh, it's that one? Okay, that's the one I'm riding. It's basically, that's all you have to do. So along those lines, in that vein, you want to see this value area be down here. You need to see value be clean to the downside at some point, so that this yellow box here fills in like this, basically, right? You see these yellow boxes, as I was saying, are where 70% of the futures volume of every given day happens. And so as long as that's higher, value's higher, well, the market is not going to fall down, and you're not going to get much confirmation. On a day when the market's actually coming down, you will see this value markedly lower, and more importantly, you'll see it in this sort of manner where we call that clean to the downside, meaning that it is not overlapping at all with the prior day. Like the prior day's value area is here, and then the next day's value area is going to be like this, right? And that's important to note. And this is also fascinating to me, because this is clearly something that those of you who are only paying attention to candlestick charts, you don't see this. You don't know where the value is inside of the candle, right? The candle may be overlapping a lot in price, but what if the value area is not overlapping, right? So this is very, very important. All right, a little bit more nuance here to talk about. So on this Friday, there was no migration lower of what we call the point of control. That is important. On a more bearish day, the point of control will migrate lower, and it'll be lower closer to the end of the session. This point of control here is above halfback. The point of control was above the midpoint. If you don't know about this stuff, what is the point of control? That's the price level where the most futures volume transacted over the course of the particular day. And that transacted relatively high in the range. And again, if it was more bearish, you would see this number here that was 16,175. You would have seen a higher number than that somewhere down here. And here the volume picked up a little bit, but none of these levels was able to get higher than that 16,000 area. And then you can see the volume kind of tapers off a bit down to the lows, which is also less bearish because they're just not committing the volume at these lower levels. They were committing it more up here when the market was chopping. So that's important. All right, last but not least, a little bit of nuance here. This is very, very nuanced, but I love this stuff. This is where you really start to kind of geek out on the profile, so to speak. Look at the value area low here of Thursday. The value area low is the outside band on the lower end of where that 70% of the volume traded, roughly. It's not exactly 70%, but it's, one standard deviation on either side of the mean makes up almost 70%, and that's where you get the value area from. Look at where the low of the day was on Friday. So nuanced and literally one tick below the value area low. Okay, ladies and gentlemen, that is a market that is still being bought by momentum type of traders because that's a very, very nuanced level, and then that level you want to carry forward on Monday. Mark my words, that will probably be a short if it gets breached on Monday, because this is what we call a weak low. A weak low is one that, for instance, either comes down to a prior low, so you have a low here, and then you see a market come down like this and bounce. That low is then weak because it's double the reference here. You can consider that a weak low. A weak low is also when a market comes to a very specific and nuanced reference that almost nobody sees, that the average trader is not going to know about, something that is specific only to market profile, and this is one of those, that the low of the day was right at the value area low. So construe that in two ways. One, it's a short Monday, Tuesday, Wednesday, or whatever, whenever, if that level gets broken in the regular trading hour session, it's probably a short because that low is weak. But two, more importantly, a stronger group of sellers would not stop just because they hit the value area low. It just doesn't work that way. They're not thinking of that, right? When institutions come into the market and they're selling the market isn't stopping at these very, very specific, minute levels like a value area low. It's just drilling right through. So that is something to think about, all right? So that's some of what I'm seeing in the market profile. And always, as a reminder, shadowtrader.net/PPP. The link is in the description below. Again, I write a newsletter about this every single morning called Peter's Pre-Market Perspective. It is super inexpensive, 20 bucks a month. I always put that out there at a very, very cheap rate because I want everybody to get this information. It's my video every morning on how I see the market. Also, you can get 7 days, or rather 1 week, like 5 trading days of that free as well, on a free trial at our site. And as always, anybody who is a member of any of our trading rooms, so we've got the live trading suite and then we've got my room, the weekly options room, I always give a free subscription to the Pre-Market Perspective to any subscriber. It always sort of comes with it as a package if you're signed up for any of our rooms. If you take that Tasty Trade 6 months free, same thing. You'll still get my Pre-Market Perspective every single day in the morning for 6 months straight. So really, really good deal. Hope you take advantage of that at shadowtrader.net. Time now for the #1 draft pick, where I give you my top idea for next week. And this week, of course, is Bitcoin. If you were paying attention, you would know that we almost hit a new record today with Bitcoin futures going all the way back to that 125,000 level. This is the Bitcoin futures continuous chart. On this continuous contract, the top is 125,200. That may differ a little bit from the actual Bitcoin price itself that you might find on Coinbase. But obviously for traders, this is what matters. And it completely makes sense to me that we backed off a little bit at the end of the day because there are obviously sellers up in this area. But I think that's a good thing because the more times we touch and then go back, the more powerful it's going to be when it hits that 125 again. So I do think that is a buy point for Bitcoin. The purest play out there really is just to do this stock called IBIT, which is IBIT. I have a bunch of shares long of this IBIT, and I will probably be adding even more as we move around this area, or if we break more definitively. And then that's the pure play. But also, I think a couple of stocks you may want to keep an eye on. Coinbase is probably going to be strong as long as Bitcoin is strong. You see the Coinbase is here breaking out of an interesting balance area with these lows at 300 and these highs at about 350. And so that should double the balance area at least to about 400 at the very least. And you can see it's already well on its way. It's at 380. So if Bitcoin's strong and breaks out, expect Coinbase to break out. And I would also keep an eye, last but not least, on Hood. Hood tends to do well when Bitcoin is strong, and it should be benefiting from all things crypto. All right, so that is the situation in terms of the number one draft pick this week. It is Bitcoin and all things Bitcoin related. And again, we are bumping right up against that $125,000 resistance. And I do think we're going to see much higher. How high, I don't know. But between now and the end of the year, I think Bitcoin is definitely going to move in a big way. And you should definitely be aboard that train when it goes. All right, last segment here, of course, is always looking ahead, but this one's kind of interesting because a lot of this stuff that's up on the screen is not even happening. We've been in a government shutdown now for 3 days, and it's probably going to be going on into next week, and that means that economic data is not being released. If you were paying attention this particular week, we didn't get any employment numbers on Thursday or any of the data that should have been released on Friday. We didn't get that either. And so here, I've put those that I don't believe we're going to get in italics, which I think is the trade balance, the initial claims. These are probably not happening. I'm guessing that we are going to get the FOMC minutes next week on Wednesday, and we are going to get the consumer sentiment because that comes out of the University of Michigan. So not really under the government umbrella, I'm guessing. So just keep that in mind. Overall, I think this is bullish, right? A market that is not really being disturbed by economic data that's just sort of in a vacuum like that. I think it's bullish to not have these numbers coming out, but that's just me. So I just keep that in mind. It's kind of a tailwind, I think, for equities without getting that information. And earnings are relatively quiet, but they're about to ramp up. But a couple that I'll be looking at is STZ, Constellation Brands, on Monday, and then Delta and Pepsi on Thursday. But next week is when things really start to heat up because that's when the bank earnings start to happen. And before the open on Tuesday the 14th, I'll talk about this in next week's video, of course, on the 10th, but you're looking at Citigroup, Goldman Sachs, JP Morgan Chase, and Wells Fargo. All of that is happening on Tuesday, October 14th, and that's the official kickoff to the Q3 earnings season. So that's when things are going to heat up on that front. Right now, pretty quiet, and as I was saying, pretty quiet on the economic data front because of that government shutdown. If they reopen the government, then of course we'll start to get our numbers back on a regular basis. And that's my show for today. Thank you so much for spending a little bit of your weekend with me. Let's recap a little bit what we talked about. We went through all those different segments, and I hope you understood the underlying theme and everything is basically one of divergence and rotation and signposts. And when a market is more bearish, you should know it by looking at all of those different things like market internals, those 11 sectors, and market profile. And only when you get confirmation from all of that do you know that you've really got something going to the downside. And that, I think, is where a lot of traders fail, newer traders especially, because they are very, very price-based. Most traders, especially newer traders, do not know about or understand context. All they know about is price, and that generally is a road to ruin because you absolutely have to understand context, right? So if you want to know more about context, come trade with me. I guarantee you, even if you just take a 1 week $7 trial or you spend a little bit of time with me, you will leave a better trader, I guarantee you, because I am live every day in my room talking about exactly this stuff. Obviously putting out a lot of winning trades along the way, but I'm spending most of the time talking about these market internals and all of the context of what's going on as the market is unfolding, and I'm trading live with all the traders in my room. So definitely check that out. All the links are in the description below if you want to trade with me. You want to join our live trading suite, stocks and options and futures. You can get 6 months free with the Taste of a Trade promotion. Just hit the links in the description below. All right, beyond that, new studio is coming. Thank you so much for your patience. I am right now just waiting on my cameraman to get back. He's on a shoot somewhere in upstate New York, and when he comes back, we are hopefully going to be turning everything on in the new studio. I'm super excited about that, bringing you the new weekend edition, bigger, better, I think you're going to absolutely love it. Really beautiful setup over there and a lot of new things. And again, I think it's going to be a fantastic show, so stay tuned for that. All right. On behalf of myself and, of course, the entire Shadow Trader team, I'm coming at you from beautiful Los Angeles, California. As always, be safe out there. I wish you good trading and good night.